Hey traders, Parker here with another indicator. Today I will introduce you to the sector rotation model indicator. As you can see in the lower part of the indicator, I've put all the different sectors in here and I've grouped some of them into the offensive and defensive. And those groupings for the offensive would be the financials, consumer discretionary, technology, industrials, and material. And then for the defensive, I've grouped together consumer staples, healthcare, and utilities. And energy is going to be by itself. And the other of the some of the features of the indicator, I'm going to cut this off so you can actually see some of the different things. So cutting the labels off, and just gotta wait for it to repopulate. Thinkorswim to repopulate everything. And I have it on the max available, so that's another thing that's taking it so long for everything to repopulate. What you're seeing down here is kind of sort of like RSI, but but it's according to the 52-week high and the 52-week low. And that's what you're seeing down here. So this would be the 52-week low, and this would be the this is 90, and 100 would be the 52-week high for the stocks. But essentially, what you're seeing down here is cyan would be your offensive, magenta would be your defensive, and yellow is going to be your energy. So these gray lines, what you're seeing is just the averages. If it's above average, then the average itself would turn into cyan. It was like magenta is above average, defensive is above average. So the average, this triangle line is the average of that, and it's actually going up. Same situation with energy. Energy, if it's above this average, to be this average line be yellow. But these are based off the actual prices in the sector themselves, and it represents where they are. So we can look right here, and this is the S&P 500, and right now it's saying it's at 41%, 44.71. That's basically down here. It's at 44.71. And this is the 52-week mid for the S&P 500, 52-week low, and the 52-week high for the S&P 500. And you can look right here in the top part of the indicator. That's what these lines represent, these same lines down here, which is 90, 70, 50, 30, and then you have 0 down, or 10% as 10 down here as well. So you're getting the same lines down here, and you can see right here we're at 44.71. And when I cut the labels back on, you can see the same thing down here. And this 44.71 represents where price is between the 52-week high and the 52-week low. Percentage was in this range right here. So that's what this indicator represents. And you can look right here. The current price for SPY is $437.97. Why it's at 44% of its range between the 52-week high and 52-week low, which works like RSI. So right now, if just like RSI, if a value is between 50 and 30, it's considered neutral. So if you look at the value right here, or percentage for the for these stocks, they're all this second number, they're all below 50, but they're greater than 30. So that's why all of these are white. And if you look right here, it's white. You only have one stock in the offensive that's above all of these, and that's the materials. And right now, the offensive stocks, they're all neutral. Like, they're not a buy and they're not a sell. They're all really in a waiting period, except for the materials that are in that were in that group. If we look at the defensive, we got the staples, we got consumer staples, healthcare, and utilities, and they're all above 70 on their rank and within their 52-week ranges. So we're going to go to XLE. It's going to be the energy stock. And as you can see, energy has been going for a while, especially during this time period right here. And it's just been steadily rising. So the way you use the indicator, if it's above 50, just like with RSI, you would want to, well, this is actually 70. This straight line right here is actually where it represents 50. So if it's above 50, it'll be a good stock to possibly invest in. Just like with RSI, it'd be in a positive range between 50 and 70. And then you can consider it being overbought possibly if it's above 70. But in my experience with this, after programming the indicator or whatever, that's not the same experience. You can look at 70 as a pullback, and then you have 90 as well as a pullback area. But generally, it's above, if any stock is above 50 within their 52-week high, 52-week low, it's generally a buy for me. And you're just looking either for a pullback or you're looking for an area to get in. Like here, you have all these areas of supply and demand that's drawn out. Some of the other features of the indicator, it shows divergence. Anytime it says divergence defensive, it means the defensive average is increasing while the offensive average is decreasing. And if it said divergence offensive, that means the offensive average is increases while the defensive average is decreasing. And right now, the defensive stocks are in an uptrend, or that grouping of stocks are in an uptrend, and the offensive stocks are in a downtrend. So what's the key to this thing? So the key is knowing where we are in the market cycle. Are we bull, bear, or reversing? So right now, technically, we'll be in a bear, and you could say we're in a bear market right now. Wrong stock. This right here, I put 10% for its correction for the S&P 500. It did a 10% stock, so that would be a correction. But normally they say a correction is more than stock office highs more than 10%. And right now the S&P 500 is really just headed there. But right now it's actually below is 50%, where 50% between its high and low. So really you're waiting for it to get back above this area, possibly go and drift on back down. Possibly getting a bounce somewhere within this 30 or this and these shaded areas, this is the 52-week close, lowest 52-week close, and this bottom of the shaded area is going to be the highest 52-week close. And all this is based on a week. So you can see you have week right there. So the other part of this indicator, the other part of this is invest in the top sector ETFs depending on the market cycle and trade the strongest stocks in the strongest sectors. Right now, any of these ones that are yellow are all the strongest sectors. The way that I program the labels to change colors, if it's below 30, it'll be gray. If it's in between 30 and 50, it'll be white. If it's above 50 and below 70, it'll be green. And if it's above 70, it'll be yellow. And that's how these different labels, the colors on the labels actually change. And right now, I have the indicator set where it's only showing me the three different groups. But out of the box, when you first get the indicator, it's gonna show you everything, and it'll be on you to change it how you see fit. What's best gonna help you out? And I'm going to move this one. Yeah, move that out of the way and let it redo it real quick. And this is what it's going to look like out of the box. So the S&P 500, I can tell you right off bat, is this red line right here. And this red dashed line is the average of the S&P 500 within this bound or within this ratios I created. Everything works just fine, and like I said before, you can see how these are the retail and communication sector, and they're way down here. So they all work together. But like I said, it's on you to change everything up. And I can show you, where is it? Yeah, we're going to push it back to 3 years. And you just got to wait for everything to load up. So this is the period during the pandemic. This yellow dotted line is going to always be energy. And this yellow line is always going to be energy. The square and the triangle, they will be either offensive or defensive. And the magenta, and then you have the cyan line as well in there. But this just represents after the pandemic, when everything started back going up. As you can see, these are the these are the actual sectors versus the these are some of the sectors. These were just lagging, coming down actually. But you could tell, like I said, it's on you to change everything and see how everything you want. It's fully customizable. But you have the averages in there, and you also have the actual percentages within the 52-week lows and 52-week highs of each one of those sectors. So one way that I found out that works pretty good for me is I would go in and cut the actual off. And you can look at it like this, and this says average. So technical, that's the actual. I cut that off and leave the average on. Industrial, cut the actual off. Cut the actual off. Actual off. No, this should be the average. Yeah, that's the average. So that's stay on. Healthcare, actual. Yeah, I didn't even click. All right, healthcare average, actual off. Communications, actual off. Real estate, actual. Real estate, actual. Retail, retail, energy is gonna stay on. All this stuff is gonna stay on. Those averages and those averages and their actuals are gonna stay on. The S&P 500, I'm gonna leave that on, and it's actual. So what you're going to be left with is the actuals from the SPY. From the SPY. Yeah, what you're going to be left with is actuals from the SPY, the offensive, defenses, and the energy, and their averages, while all the other averages of everything else is going to be on there as well. That's one way of using this indicator. Feel free to use it how you wish to, and what you feel is going to be best for you, work out for you. And like I said, you can come over here and cut the labels off. And you can see everything just repopulating. And like I said, these are all the averages for everything else, while you're left with the actuals of the offensive, defensive, the SPY, and energy, and then all those other averages. Or you can actually just cut all the actuals off and just leave the leave the averages on. However you see fit. The way I had it earlier was basically how you want to use when you making a decision. So I'm gonna take the out of the box one off and put the other one back on. And the most important thing, even though you're getting all those lines and everything, is actually these labels. It's telling you everything in the labels. The only thing I didn't include with this with these labels is the actual averages. So I thought the S&P 500 and the S&P 500 and those groupings would be more important. So that's why I purposely leave these on. But for the most part, the offensive is gonna follow the S&P 500, and you can see they really just mirror each other. And if you want to look at it, you know, the S&P 500 is actually moving below the offensive, and everything is just going down. But this is the indicator, and the scanner works just fine as well. Right now, I have it set at stocks between $1 and the volume on any of the stocks has to be 1,000,000. I'm gonna add one more stock filter, and that's just gonna say that I want it to show me stocks that are at least, I'm gonna say 5% up on today, and they're over the mid between their 52-week average and 52-week low. And this is what it sends back. This is what it sent back. And right now I have it descending by sorting the stocks by volume, and then I come up and sort those stocks by percent change. So CASA is one of those stocks. So, and there's some stocks where this is not going to work on. And for the most part, I would tell you to leave this on the S&P 500. And don't worry about it on some of these other stocks. You're still going to get the labels, but you're just not going to get the average and the actuals where they are in those areas between 100 and 0. And this stock right here is CASA. And as you can see, it's above its 50 for the between the 50 and 52-week high and 52-week low. And this is to be the midpoint. So it's above that midpoint. So on an RSI, it was like I explained earlier, if the RSI is above 50, it generally means bullish. And that's basically what I've done with this indicator. Price is now the oscillator. And what the closing price is gives you the indication. And also this would change color. I forgot to say that. This would change color also depending on what area this is in, just like those labels will change color. So it's also help you out in making a decision. And this indicator is basically helping you to make a decision where your focus is going to be on that day in these stocks. So like I said before, the all these different sectors are down here, and you can go in here and, well, this is actual top version, so you wouldn't have to make any changes to that. But if you want the Fibonacci lines, you can actually go in here and change these to fib lines if you want those. Right now, I have the period set as week and the length 52, and you can change all these colors. You can change all of that. You can come down here. If you don't like the green and red, you can change all that stuff as well. With the actual indicator, if you don't want to use like, you can use SPX right here instead of SP 500. You can change energy. You can change technology to QQQ. Right now it's XLK. But you can come through and change everything on here. And real estate, you can change the overbought. You can change. I just left those in there for the RSI because I based the original thought was RSI. If I can bound a stock and show it just like an RSI showing the momentum or the relative strength of a stock. And right now, the relative strength of, and that's the key to this indicator. It's showing relative strength within those sectors, and that's what I really wanted to show when I developed the indicator, because I was getting creamed when it came to the tech sector, And we can go and look at one of the stocks that I like to play is Snow. And I've been getting creamed on it because all the tech sector is down. But Snow moves like a penny stock. So I could catch some of those moves. Because if you look at it right on this day, it moved from 198, actually down from 214 to 198. And you can catch those moves like that. And we're going to look at Tesla. And we're just waiting for it to populate. And how did Tesla do today? It did pretty good. And I'm going to, but it's still the whole, for the most part, the market is still trending down. But Tesla is one of those stocks that is resilient. So it's above this 50 line, and it's moving, kind of trying to move back above this 70, and really get the momentum really going back up. I was listening. Was it one of the guys I follow on Twitter? He was just talking about the bottom being in for the Qs, but I don't know about that, especially with the Fed doing their thing with the interest rates, and I really don't think an actual bottom is in, because it's still in a downtrend, and I don't want to say oops. I don't know. I don't want to consider that's kind of like a double top and it to keep going down, but it's a possibility it could. And right now, it's RSI rating for the Qs is 24, and we go down to Astrotech, XLK. And as we can see with this XLK, it's showing you the same thing. And this is the Select Sector Spiders Trust Technology Indicator, ETF. Even though Tesla is up and it's reflecting almost the same as Tesla, but it's still trending down. It might have some more bounces in this area, but it may cross below this 30. But right now, its RSI rating is 35.7. But that's really the end of the video. And these are the features of this indicator. And I wanted to make sure that I explained to the best of my knowledge. But if you don't know much about this sector rotation, it's really just a business cycle. Check out a couple of other videos for more information before you decide to get the indicator and see how best to use for your advantages. I know a lot of people use the business model or the sector rotation model, really playing options. But this will be the end of the video. I hope that this video has been educational and helped you out. And if you haven't already, please like and subscribe. And I appreciate you all for taking the time to watch the videos and listen to what I have to say. And oh, the one other thing I wanted to show you actually working, playing out. So this is that video of it this morning actually playing out. For those who watch, this is actually the end of the video, but I'm just letting this play out. I recorded about 24 minutes of the S&P 500. Well, not the S&P 500, but actually the indicator itself just working out, because I wanted to show you the actual indicator working versus me going to the on demand and trying to get it to work. So, and if you notice in my past videos, on demand feature can be kind of finicky. So I just took the time to record the actual day's action just playing out, and the indicator actually working. But I'm going to shut the mic off, and I'm going to let it play out for a few minutes. Now I'm going to cut the video.